stock trading strategy? That would be dividend capturing 2.0. Actually, it's not a TV. It's one of those vibe boards. Really? Noisemaker.
Dun, dun. What did you do?
All right, let's try this one more time. Here we go. Now it might work. Warning, this behavior is not in line with our policies and may result in gifting suspension. Reasoning, learn more in the rules guidance. Oh, well, I'm kind of curious what the heck that is. J Mac, how you doing? Tony Hawk, your cousin, uncanny resemblance. Thank you. I've heard that one before. Donald, how are you doing? He's doing a great job. Thank you. You have nice to say cheese. Cheese, thank you, Kay. And we are loading up cool beans. All right, kids, hilarious, intelligent, busting our B2, not dumb question. Okay. What is your favorite stock trading strategy? We talked about that already. It is dividend capturing 2.0. Who do we have over here? New chat. Ooh. Mercer, thank you for that. Steve wants to take a look at Halliburton. Hey, look at it, buddy. It's popping up. There it is. Yay. All right. First one we're going to look at today is going to be Halliburton. There we go. Halliburton. Let's move this over this way so we can read it. Now, for those of you that have been here before, we are going to go one step at a time and show you the strategy.
I told this guy to go.
Hey, look. Hey. Over here. You want me to move it over here? So you can reach? Can you reach way over here? No, you can't. Want me to move it? Okay, jump down for a second. I'm going to move it to right there. Okay? Now, this is going to be your job. You ready? You're going to go like this. You're going to go down, up, down, up, down, up, sideways, and then up. Can you do that?
Guy, I told you. I told you the line will be going like this. Up, down, up, down,
yeah,
up,
yeah,
down.
Yeah, but it's over there. That's it. See the line right here? Look. See this line? Okay. You do that line over there. Okay. And I'll do this line over here.
Can I do the line, the upside down line? Can I do that?
Yeah, right over there. Alrighty. And what do we have? CSX. My first. P. Morse's first time.
Daddy, Papa G, can I do the talking?
Yeah, you can do the talking. He wants to do the talking. Let me come over here.
So, guys, I told you the line will be like this and go.
Yeah, that's exactly what it does. Up, down, up, down. All right, cool. Scotty Long, you like that? Okay, so Halliburton. So, kid, how many Bitcoin do you own? Now, I don't do any Bitcoin at all. I've already said I don't do cryptocurrency. And Vendra Beats. I'm the grandfather. I'm not the father, but thank you. Heads or tails? Thanks, Ryan. Cool, Scotty Young. Compare Slumberjay. Okay, Mark, Honeybee, you got to give me the ticker symbol. Mark will take a look at SLB in a little bit. Wow, I look very young. Thank you for that. All right, so here we go. Halliburton, 2373. Look, buddy, right here, 2373. Hey, are you paying attention? 2373.
Right here.
Look, right here, too. 2373. Okay, so basically, Halliburton goes down, up, down, and then sideways, and right here, it's going up.
So, it's going up and this way.
Okay, so 2373 seems to, Ocean Mark, like SPY, I don't like SPY, and we're going to show you in a little bit why I don't like SPY.
That means, guys, that means this time it's a go.
It should. Let's keep on looking. So, first thing I want to look at is what kind of premium am I going to collect on a weekly basis?
Way that line is going to do.
Yeah?
See the cheating way that the line
All right, we're going to do this one right over
is
here.
gonna do.
Okay, can you find me the 23? Right here. There's your job. 23. Where's 23?
Okay, 23 is right.
Here. Right here.
23.
There's 23. And how much is the 23 going for? Look, right here. What is that number right there?
20.
Is that higher or lower?
Lower, but kind of less. How looks like it's higher.
No. See, 23 is here.
And then
20 is right here. So that's, buddy, that's a no. Yoo-hoo.
that's a no.
That's a no. It's less than 23. We're looking to get 1% a week. So 1% of 23, 2273, the closest number is going to be the 23.
Yeah,
And it's less. So that's a no.
So this is a no, and
This is a no. Sorry. Halliburton's going to be a no for this week because 20 is less than 1% of 23. What, buddy?
Gosh, here's the cheating way the line is probably gonna do, guys. It's gonna go straight and then it's go. That's the cheating way.
That is the cheating way.
That's the
Trying to beat the market again. We talked about this. Osler, thank you kindly for your vote of confidence. I like that. How to read charts. Smart life idea. Reading a chart's really not that difficult. Let's zoom in.
We are just checking it out.
Okay, so just a quick little note on how to read a chart. There's 5 numbers you're looking for. Number 1 is the opening of the day, the high of the day, the low of the day, the close of the day, and then the volume.
So there's a gap right here.
Yes, there is a gap right there. That's very good, buddy. So, 5 numbers. Opening, high, low, close, volume. 5 numbers. So let's take a look. Now, this is called a candlestick. The top of the candlestick is the high of the day.
The rock.
Hey, people can't see because your head's in the way. Top of the candlestick is the high. This is the low. Now, on a red day, the opening price is this horizontal line. The closing price of the day on a red day is the bottom red line, showing a downward trend. On the opposite side, you got the green. The high, top, the low, bottom. The lower horizontal is the opening price of the day. The top horizontal is the closing price of the day.
So this is a big fat. So it's so fat. It's so fat right now, guys. But why?
And this number here is the volume. How many shares traded that day?
So, guys,
so you got the opening price,
this is
the high of the day, the low of the day, the close, and the volume. So to read a chart, it's basically how does it look like it's moving? Up, down, up. It's a simple move. And if that's too difficult for you, just change what you're looking at. So we're going to change the style right here.
The style.
And
You can't see it.
that might be easier. If you can't read candles, this is not that difficult. Down, up, up, down, up,
now it's
down,
skinny
up.
like that.
So if you can't read the candles, use a line chart. Okay? Green means it's going up. Red means it's going down. That's pretty easy. Okay? So I hope you got that one. William, kids asking the right questions. Why is the green candle so fat? Man who solved the market. Why are the candles so fat? Okay. Now, the reason the candle is so fat is the distance between the opening price and the closing price.
Yeah, because
and there's one more number to take a look at. The top to the bottom is called the range, or R right there, range. Okay, so you got the high, you got the open, the close, the high, the low, the volume, and then the range. That's all the numbers you need to know and take a look at.
Just find out.
Yeah?
Yeah.
All right.
To find out.
Let's go. Next question. Hey. Say, next question.
Next pressing, guys.
Okay, Mark wants to take a look at SLB. Schlumberger.
Okay.
Now, Schlumberger SLB is a dividend.
S. Okay, I'm going to do S.
Yeah, you want to? Hey, you want to stand on here? You, right here. You stand right there.
S. Okay.
Right, hey, right there. Look. No, first you put this here. Okay, now S.
Okay.
L.
Okay, and what there? Is this L?
Yep, that's L. B.
Okay, B.
And then you hit enter. B. Enter. And there we go. Now, what are we looking for? Hey, come back over here. What are we looking for? Okay, see if you can do this. You ready? Where's the high?
And
Yep, the high right there. Where's the low? No. Where's the low? Absolutely. Where was it? Way over there. Where is it right now? In which direction is it going? Watch this. You ready?
Up.
Sideways, down, sideways, up. Pretty cool, right?
Yeah, and now it's gonna go more up, guys. And then it's gonna go.
Yeah, it's going to go up and then it's going to go down. Absolutely. All right, so that's Schlumberger. First thing we want to look at after we do a quick look at the chart is find out what the numbers are. Well, here's the numbers right here. What number is that right there?
3684.
Absolutely. 3684, 3684. Look, way over here. 3684.
So yeah.
3684. So what's the next number? 37.
47.
Circle
Because-
37.
Because
Right there, 37. 37. And what number is this right here?
33, and it's going a
Is
little
that higher or lower?
higher.
33 is higher than 37?
Yeah.
33, 34, 35, 36, 37. 33 is lower than 37.
But look.
Yeah. Yeah, 37. 33.
See, look.
Yeah, I know. 37. 33.
So if it's gonna be higher, it's gonna be up here to be higher
No.
than that.
Say, look.
Yeah.
Look. 34, 35, 36, 35, 35, 50, 36, 36, 50, 37, 37, 50, 38, 38, 50, 39, 39, 50. So, is 37, is that higher or lower than 33?
Higher,
Yep. Higher.
but not lower because
Not lower.
I
So,
thought
SLB, that's a no.
SOB, that's a no.
Because 33 is lower than 37.
Because and that.
Yep, that's what
Roll
Papa
that
G
one.
says. Okay, so Oceanic wants to take a look at SPY, buddy. Let's take a look at SPY. First we want to do... We're going to go over to Yahoo Finance. Now, I tell everybody, if you're going to be investing in the stock market, wait, what are we doing? I've tried options. It's too hard. Crypto, I'm terribly sorry if you're having a difficulty with options. Give me a second and I'll explain to you simplicity. I mean, simply. Yeah, simplicity. Simply how to do options. It's really not that difficult. So when I say, if you're going to be investing, you really got to get a finance website. I use Yahoo Finance. SPY. Now, who said this one?
Go to it.
Mark, Mark Honeybee Farmer wants to know about SPY.
S.
Turn around. Okay, what number is that?
SPY.
Yeah, but what number is this right here? 645.
Because we are doing that.
Okay,
Wait,
so
this is
let
not
me explain.
available.
Yes, I know. Let me explain why I personally don't like SPY. Now, to show you why I don't like SPY, I want to take a look
This
at
one is not
historical data. Now, historical data is going to tell me what the opening, the high, the low, the close, the volume for SPY for a while. So let's take a look at it. So historical data, there we go.
But this number right here next, under this number, is just not available for that. So that's why this number right here, this number
Okay.
right here.
All right, he's having fun. All right, so what we're going to look at is this right here. Buddy, I can't, all right, I'm going to move it so it's out of your way. All right, right here, historical prices. So I'm going to click on that, and I want to do dividends only, right there, right here, dividends only. And then I want to see over here all the dividends.
All the dividends right here.
Okay.
See,
now,
why?
what we're going to do is we're going to take a look at all the dividends and see, have they increased consistently? Now, we want to go for 20 years, which is 2 decades. Now, 20 years ago...
This is a lot of numbers.
Okay.
You don't want to check this out.
Yeah, you're going to want to check this out. Absolutely. So we want to see, are the dividends increasing year over year over year? Because when I say I want companies that are consistently profitable, that means the numbers should get higher and higher and higher, not lower and lower. So let's see, how well has SPY? Have they been profitable? And let's see what it looks like. You ready, buddy? Hey. Hey. Okay. This is 46.
Okay.
46. 48. So this one, higher, 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 lower. Look at this. 67, 51. So now is 51 higher or lower than 67?
Yeah.
Absolutely. 51 is lower than 67. So if the profits here are 67, the next one right here is 51. That's going backwards. That's not increasing consistently. But hold on. Let's see if it does it again. Okay, let's check out some more numbers. Are you ready? Wait a minute. Let's go. What?
So can I do the talking now?
All right, yeah, you do the talking.
So these are much thinner, but
No, this is the date. This is the date.
oh, these are much thinner numbers on the dates, but
Those are the profits.
and profits are these.
Yep. Okay, so
These ones.
okay,
But
so
now is what
51
lower,
right here,
it's
2006.
supposed to go higher, not
It's supposed to absolutely. It's supposed to go higher. Look.
higher.
Okay.
But lower.
51, 55, that's higher. 57, that's higher. 79, that's higher.
And
55,
one and
no,
That's
55, that's lower.
yeah, I know.
Yeah, you know? Well, tell him. You say that's lower.
That's lower, guys.
Say, what
So,
were you thinking?
What were you thinking, guys?
79 to 55.
But-
That is a big drop. Ask yourself this question. If you're getting, let's say hypothetically you got 1,000 shares. So 1,000 shares is going to
But
give you
here, but
55,
down here.
$7,900.
But
Okay?
why is it right
The very
here?
next one is going to be
Wrong.
$5,500. What did you do? Okay. So 1,000 shares will give you $7,900.
Yeah.
Now this one, 55.
So
That's lower. Okay, but that's twice. Hold on. Now we're at 2007. We got a long way to go.
and we
Okay.
raised that and put a higher number, but what number is that?
Right here, look. 55. 65. Is that higher?
Yeah.
71. Is that higher?
Yeah.
77. Is that higher?
Yeah.
64.
Yep, that's higher.
What?
That's lower.
That's lower. 64. 66. That's higher.
Yep.
69.
Yep.
That's higher. 71. That's higher.
Yep.
Okay, that's at 2008. Let's
Yeah.
move it. Oh, yeah, we're moving. Hold on. 78 right there. Hold on. 2008. Hold on. Where were we? Right here. 71.
So
50, 56, that's lower.
Because it's so
Wait.
down.
Wait. 71. Say 71.
71.
56, is that higher or lower?
Lower.
51, is that higher or lower?
Yes.
Lower.
Lower.
50, is that lower?
No.
50 is lower than 51. 51, 50, that's lower.
Because it's got to go downwards.
59, that's higher.
So this go down. So
Yeah.
yeah.
So 79, higher. 56, lower. 51, lower. 50, lower. 59, higher. 48. Hey, one at a time. You can't do 2 pens at a time. 59's higher. 48 is lower. 53, higher, lower. So it's like 50% of the time, 3 steps forward, 2 steps back. 2 steps forward, 3 steps back. Why is it people like SPY? They're not consistently profitable. The numbers, 51, 50 lower, 59 higher, 48 lower, 53 higher, 60 higher, 65 higher, 55 lower.
Well,
Higher, lower. Lower,
Higher,
higher. Why are you
higher,
playing that
higher,
game?
lower.
I'm looking for companies that are
Higher,
consistently
lower.
profitable, meaning every
Higher,
single number
higher.
should be higher. So let me show you one that
Higher,
actually fits.
lower. Higher, lower.
Okay, this is what it should like. Now, when I say consistently
Higher,
profitable, you
higher,
lost
higher,
40,000.
Lower.
Phil, are you serious?
Higher, lower.
How long have you been live?
Higher,
Since 9.
Lower.
Okay.
This is like a pattern.
This is like a pattern. Absolutely. Okay, so let's take a look at Microsoft. Okay, 20 years ago, 2005. Here we go. You ready, buddy? 2005, right here. Look. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Did you notice the difference there?
Yeah.
Every single year, the number got higher and higher and higher and higher for over 25 years.
and
That's a
then-
quarter of a century.
That is in a couple numbers of higher, and then
No. Microsoft, all of them were higher.
all of them are higher, but
Yeah, Microsoft.
But-
Year after year after year, higher. What are we doing? I've tried options, it's hard. So, crypto, let me see if I can explain options to you in a manner it might be easier, okay?
lower.
Okay, I got some noise over here. I don't know who's making that noise. Okay, you guys got to check your, what do you call that? Okay, check your microphone, because we're getting feedback. All right, so, crypto, are you ready?
Okay.
Let's imagine, hypothetically speaking, you got an old car in your backyard. Let's call it a 1968 Volkswagen Beetle.
It's not.
So you take that puppy and you push it to the front lawn. Hey, am I talking?
Yeah.
Wait till I'm done, please. Thank you. Thank you. Hey.
You're welcome.
Oh, okay. So let's say you got a car in your backyard. You push it out to the front. Slap a for sale sign at $5,000. So some guy, let's call him Ted, down the street comes by and said, hey, I liked your car. Let me give you a couple $100. Hold it for me until Friday. Let's consider that as a non-refundable deposit. So Friday comes, he's either going to come back and take the car for the $5,000, or he's going to say, no, just keep the deposit, sell it to someone else next week. So next week comes, Joey from 2 towns over comes over and says, hey, I liked your car. Let me give you a couple $100. Hold it to me till Friday. So Friday comes, he's either going to pay for the car, the $5,000, or he's going to say, you know what, I don't want it. You keep that deposit and just sell it to someone else. You can keep doing that every single week until somebody finally gives you the price you're looking for. So when we're looking at stocks, we're basically doing the exact same. That one's not in. Okay? So we can buy a stock. This is SLB, which is Schlumberger, 36.84. That's the price. So if I buy it for 36.84, I'm going to sell it to someone else at 37 because it's the closest number. 36.84, the closest number is going to be 37. Don't do that, buddy. Okay, and the 37 is selling for 33 to 40 cents. Not quite 1%, but still, it is a non-refundable cash deposit. So when Friday comes, whatever the stock is going to do, if it's going to go up over 37, they'll come back and they'll buy it at 37. If it doesn't go over 37, they won't come back and buy it. So then you get to sell it to somebody else next week. So the thing is, you can do it every week, every 7 days. So take a look at this. 5 September, that's this Friday. 12 September, next Friday. 19 September, 3 Fridays. 26 September, 4 Fridays. 3 October, 5 Fridays. 10 October, so on and so forth. Every single week, I can collect some money on each and every position that I have. Well, that's what I'm looking for. Simple, safe, predictable, consistent, 1% per week.
Look, go by itself.
Yes, I saw that all by itself. All right, so let's see. Take on some more questions.
This has like a circle.
So crypto, I hope that kind of explains it a little bit better. Phil, did you lose because of earnings? This should have been my dad. WTF. All right, Brandon.
Yeah.
Ooh, Franklin, NWN. That's Northwest National, right? Okay, Northwest. September, October, December, March. Those are months of the year. Basically, that means I can't trade weekly options on a company that only offers monthly. I don't do monthly because the numbers just don't work. So, that's a no.
It's a no, guys.
That's a no.
The numbers are just not right.
The numbers are just not right. Now, don't get me wrong. NWN, it's a great company. It's a dividend king.
Yeah,
They've increased their profits for over 50 years.
No, that's too many years for that.
That's way too many years for that. All right, what else do we got? What else do we got? Yeshi, say hi to Yeshi. Kuzo.
Oh my God, no,
Hot mess.
Okay.
Vendor beats. What's going on? Vendor beats. So, kid, how many Bitcoin do I own? None. Okay, crypto, what are we doing? I tried options. It's hard. No, actually, it's not hard. It's very simple. If you buy something at this price here, 41.53, I can turn around and sell it for 41.50, get a nice premium, and then someone just buys it from me at 41.50. I get all my money back, plus I get the premium. The premium is what I'm looking for in the first place, because it's usually more than 1%. More than 1% every single week is over 50% per year, and that's what I'm looking for. Gifting suspended. Okay, whatever. Okay, notice is unclear. I'm not sure why I'm getting this restriction. My live doesn't contain content mentioned in the notice. Okay, it's not allowing me. Whatever. Dylan! Aston is not consistently increasing its dividends. Thank you. Buy a load of stock in that company, blah, blah, blah. Elliot, what's good starting balance a person should start with? Okay, Elliot, what I tell everybody is don't put any money in the market at all until you practice with paper trading. And once you get good at paper trading, you will know for yourself what's the right amount to put in. What's the heart rate? I have no idea what that means. I mean, I know what it means, but in the context in which we're talking about, no idea. All right, what else do we have? Ooh, AEO. Buddy, we're going to take a look at AEO. Uh-oh. Wow, I missed all these questions. SPY. Okay. Wakilda.
But this is not 56 questions.
I know for the silly questions. Let's take a look at AEO. AEO, you are the vowels. Take a look at this, buddy. Where's the high? Way over there. You're not going to do the high and low for me? Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up. It's at 12.93. Well, the closest strike price to 12.93 is going to be 13. Well, take a look. 13 is paying 75 cents a share. Well, that's crazy. 75 cents a share on a $13 stock. That's a little over 3%, I think. 3 times, that's 39. No, 6%. Well, I like the idea of 6%. Why not? Well, you coming back?
I'll just get a cracker.
Okay, I'm just going to get a cracker. Alrighty then. Also, AAP, Advanced Auto Parts. We'll take a look at that in a little bit. What are we doing? Options, try, blah, blah, blah. Okay, so anyway, I like the numbers. They're simple. 12.93, the 13 is selling for 75. So let's use this as an example to see if it works. I would say his favorite is Macy's, not this year. I do like Macy's, I do. What is your ROA? Can you explain what ROA is? Okay, so a year ago, let's take out the glasses. What are we doing here? Michael, hold on tight. Okay, can someone explain to me what ROA is? I know what ROI is, but what's ROA? Okay, a year ago, AEO is at 1985. Now we topped the year off at 2266 back in September. All right, we bottomed out right here in June, 928. So here's your bottom right there. Show sideways, up, down, up. So what's going on here? Well, let's get a closer look. Now, I like looking at the chart. I like to look at the 1-year chart. Gives me an idea of what the stock is moving for the day. And then I look at the 90-day, the last 3 months. That gives me an idea if there are any patterns. What are the other investors thinking? Gives me a good idea. But to give me an idea of where it's going next, I like the last 30 days. So let's zoom into the last 30 days, and that would be 731 right there. Okay, so this is pretty easy if you think about it. Okay, here's the bottom, shoots up, here's the top, drops back up. Now she's coming back down again. So is American Eagle Outfitters something I want to get into? Well, look at the trading range between 12 and 13.50 right there. So let's see what it looks like if you like American Eagle Outfitters. What is that Sydney Sweeney up to this week? So let's get out of here. Let's change this to covered stock right there. And we're going to do the 13s right here. Now, I just want to show you one contract so you get a good idea of what that should look like and what it sounds like. So anytime you put an order in, before you hit this send button here, because once you hit that send button, that's going right to the market maker and he's going to fill that. So if you are not 100% sure what this is, you probably shouldn't press that button. So let's read it out loud and say it slowly and enunciate every single part of the trade. You ready? Here we go. Buy one covered call, AEO 100, which is the weeklies. 5 September 25, which is this coming Friday. That means this option is going to expire this coming Friday. The $13 call option against the stock at the market to open to open. Now, I didn't stutter. I didn't repeat myself. To open means there's 2 orders that we're opening up. First order, I'm buying the stock. That gets sent to New York. Second, I'm selling the option, the right of someone else to buy it from me at the exact same price I just paid for it. Now, you might be scratching your head thinking that doesn't make any sense. If you bought it for 13, he's selling for 13, where's his profit? You ready? Right here, here's my profit. Right there, $86 per contract. So $86 per contract is my profit. I buy it for 13, I sell it for 13. I get an $86 per contract profit. Well, what is the rate of return? Well, the rate of return, we're going to need the calculator. Okay? Now, to figure out your rate of return, it's really not that difficult. You take the profit. Okay? Max profit, $86. Okay, so put $86 into the calculator. And then we want to divide it by the investment. Well, the investment is the cost of trade, including commissions and fees, $1,214. So for 100 shares of stock, it's $1,214. My profit, 86, divided by 1,214. 1,214 gives me a grand total of 7%. Did you hear me? 7% for 1 week. 4 days. There's no trading on Monday, Tuesday, Wednesday, Thursday, Friday. If these numbers stay the same, that's a 7% for 4 days. Now, if you have margin, that's a 14% for 4 days. And what has to happen? It's going to stay where it is or go higher, one or the other. Okay, the current price, $12.93. The closest strike price is going to be the 13. So if I buy it at $12.93, sell somebody the rights to buy it for 13, it's only 6 pennies away for 4 days. Can it hit it? Maybe it will, maybe it won't. What if it doesn't? Well, if it doesn't, fine. Hold on to the stock, keep that money, then sell another option next Monday. It's the beauty of weekly options. I could do it every single week. Well, why not? Think of it this way. A weekly cash flowing asset. Cash flowing asset. You buy something and it gives you money, either weekly, monthly, yearly, whatever. But this strategy is specifically weekly cash flow. That's what I'm looking for. I'm 61. I have no desire whatsoever to go back to the workforce. I've been working since 73. I quit at 59. Okay, that's pretty close to 50 years of working. Well, I'm pretty much, I'm done with that. Oh, Bull Terrier. He's bored. Terribly sorry there, dude. Dylan. Buy Marvel this week. We're going to take a look at Marvel a little bit. Rusty. If you were that good at investing, you wouldn't have stickers all over your wall. Oh, you mean the one that says weekly options only, dividend stocks, 1% ROI? What is wrong with that? You got a problem with that? You don't have to be here. Okay, Stephen Young wants to take a look at Campbell Soup. Okay, Crypto Mike. I don't do crypto. Sorry. Bro, please, can you accept my request? Okay, Isaac, you got to send it to me again. Dylan, didn't you run out of money? Probably. If you were that good investing, you would have stickers on. Yeah, whatever. What if the stock gets called away before the EX date? Clay Day. So Clay, here's the thing. If I'm buying it for $12.93, I'm selling a call option at 13. Now, the difference between the United States stock market and stock options and everywhere else in the world, elsewhere in the world, you can only exercise your option on the day of expiration. Well, here in the U.S., if you have an option, you can exercise it any day you want. So if it gets called away, I really don't care. Let me tell you why. Because I'm buying it at $12.93. I'm selling it at 13. I'm collecting this profit. I don't really care if it goes up or not. Because my main concern is the company profitable? They either are or they're not, one or the other. I still have a few 100,000. Thank you, Colin. Okay, Cliff wants to take a look at NIO. Okay, NIO. I'm going to write this one down. AEO. For next week. So Scotty wants to take a look at what stock was that? American Eagle Outfitters. If that happens, you pray. Neo, I have no idea what we're talking about. Okay, but I bought Hormel at 27. What strike price do you recommend for next week? Okay, so Dylan, I don't make recommendations. But if I bought it at 2047, I'd go to the very next one, which would be 2050 or 2450, whichever one that was. That last stock, AEO, American Eagle Outfitters. Okay, Scotty wants to take a look at Campbell Soup, CPB. Delete. Let's go back to here. Let's go back to here. Boy, he went a lot. Where did he go to get that cracker? I mean, think about it. He went to go to get a cracker. Where? Where did he go? Can't be that far away. The house ain't that big. Okay. Scotty, here we go. Campbell, CPB, CPB. Okay, simple. Ready? High, low. Where was it? Where is it? Look at the motion. Down, up, sideways. 31.93. The 32 are going for 85. Holy cow, 85? Really? Okay, so let's take a look. Okay. A year ago was the high of the year, 52.91. She drops and drops and drops. Here's the bottom right there. Okay, the middle of July. And the bottom is 29.39. Well, from there, your high, your low, where was it? Where is it? Look at this. Up, down, up, down, up, down, up, down. One day up right there, which means she is starting to turn. Could be. I like 2 days to the upside. Okay, we got 1 day right here, which means a possibility that Tuesday could be the second day of the upside. Well, then I would jump in on Wednesday because I want 2 days the upside before I jump in. So I'm going to write Campbell Soup, CPB, CPB. All righty. Missed out on a lot of profits last week. Terribly sorry, Phil. What else do we have over here? Mark, good evening. Yeah, hot mess. What's going on? Crypto. You've tried iron condors. Yeah, you have fun with those. Selling puts and calls to generate premiums. Absolutely. Why not? All right, what do we have over here? Lizzie B. What's going on? Chris, how you doing, Chris? Mike, good evening. Hey, Florida Hockey, how are you today? Today, I'm going to college. Alrighty then. I feel bad for you. College is a waste of time, in my humble opinion. Unless, of course, you're going to be a doctor, a lawyer, or something that actually needs a college degree. Like 80 to 90% of all jobs don't really need a college degree anymore. All right. Organized entropy, PBS. Crypto Mike. David, your kid must be a good teacher. I love that it keeps it up. Thank you. I don't know who David is, but, all right, Mike. Okay, so Organized Entropy wants to take a look at PBS. What the heck is PBS? Public Broadcasting Service? Invesco Next Generation MED Gaming ETF. Yeah, no. Sorry, dude. Sorry, you have fun with that one. Say, K-Van wants to take a look at Alcoa. Love Alcoa. Check this out. You ready? Right. I don't need to see all of these. Let's cut this down to like 6. Okay, that's basically what I'm looking for. All right. So here's Alcoa. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Up, down, up. Well, that's pretty simple, right? Hold 1 second. Hey, can I have my pen? No, it's a stylus. If you're going to sit in here and chill, I need that pen. Are you coming back? You staying out here? Okay. Okay. Well, I've been replaced for Super Duper Bunny, whatever. I have no idea what it's called. But apparently he's not coming back. It is what it is. I mean, how much attention can a 5-year-old actually give, right? All right. So, Alcoa. Now, Alcoa, if you didn't know, is a dividend king. That means 5 decades of consistent profitability going to the upside. Well, why would you buy a company that's not profitable? Now, that is a good question. Think about it. Why would you buy a company that is not profitable? Crypto, is it hard? Okay. Selling puts a call, got that one. I tried iron condors. Yep, I looked at them too. No thanks, too much effort. This is gold. You can retire with this info. Franklin already retired with it, and I'm just sharing with everybody. I'm actually creating what you call a video diary or a video series for my children and my grandchildren. So you saw him. He's 5 years old. I don't think he's ready to do anything for at least 13, 14, 15 years. All right, we'll see what happens. Dub says it's annoying kid. All right, you do your thing and you do what you want. I like having my grandson here every once in a while. So this is what Alcoa has done for the last year. So the question is, can it keep going up at the rate that it's going? Well, it's been consistently profitable for 5 decades. You either like it or you don't like it. That's pretty simple if you think about it that way. So let's take a look at the numbers. 32.19, the 32 is going for 91. 32.50 is going for 67. The 33 is going for 47. The 33.50 is going for 33. Well, every single one of them on there is giving you over 1%. Now, 1% every week, that's over 50% per year. So I'm kind of curious. Before you came here, were you getting 50% per year consistently? Now, you can get 50% once or twice, but do you do it consistently? In 2008, my 9-year-old daughter crawled up my lap and said, "Daddy, what are you doing? Can you teach me?" So to teach a 9-year-old to invest in the stocks when most adults don't get it or not good at it, it had to be simple, safe, predictable, consistent, no way for her to lose. How else are you going to teach a 9-year-old to invest in the stock market? So I came up with 5 rules. Rule 1, if it's not on the list, automatic no. It has to be on the list. So what does the list look like? Dividend kings, dividend aristocrats, dividend champions, dividend contenders. And then for the fun of it, we'll throw Warren Buffett's list in there, just for the fun of it. Every single one of those stocks on that list has been consistently profitable year after year after year. So every week we check to see how many new companies there are. Last week there was 10,356 companies. Well, that's way too much for me to look at. And half of those companies don't pay a dividend. Now, a dividend is a profit that is shared with the investors. So you get 2 different companies. One that shares their profits, a dividend company, and the other one, capital growth company. They take all the profits, dump it back into the company, so the stock price goes up faster. If that's what you're looking for, you're in the wrong place. Okay? I am retired, which means my income has to come from somewhere. I'm not old enough to collect Social Security. And if I start spending my money without investing it, well, eventually it's going to disappear. Because however much money you think I have, I probably don't. I have enough that keeps me comfortable. I can hang out with my mom, I can hang out with my grandkids, I can hang out with my kids. I go down and see them 2 or 3 times a week and just hang out. Anyway, let's keep on moving. AEO have earnings next week. You are gambling at this point. Thank you, Dylan. Now, Dylan, I don't pay attention to earnings. Now, the reason I don't pay attention to earnings, I've seen many times where they had positive earnings, Great, we made a lot of money. We made more money this year than we thought we were going to. And then the stock goes down. I've also seen companies where their earnings weren't good. Oh, we didn't get our earnings this night. We missed our target. And then the stock price goes up. I don't pay attention to earnings. Some companies react more so to good news, bad news. Okay, I don't pay attention to those. Dylan, I'm down on Marvel and Hormel because of earnings. Okay, see, are you down or are you out? Just because the stock goes down doesn't mean anything. Okay? Hormel has been around for over 100 years. 100 years. I don't think they're going anywhere. Could you say the 5 rules again? I'm recording now. Oh, Brandon. 5 rules, simple. Okay? If it's not on the list, it's a no. Number 2, it never sell at a loss. Number 3, every company needs to be consistently profitable. Rule number 4, weekly options only. And rule number 5, make sure the numbers work. We are going to go over them, a few more examples just to show you. Are they consistently profitable? Do the numbers work? Does it look like it's going in the right direction? Well, this one's pretty easy to see. Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Up, down, up. Well, that's pretty easy. Now look at the numbers. 32.19, 32, 91, 32.50, 67, 33, blah, blah, blah. All those numbers look great. So let's give it a try and see what it looks like. No good options for next week for Hormel. Okay, Dylan, we'll take a look at Hormel in a second. Let me finish up with Alcoa. All right. A year ago, Alcoa is at $30. This is kind of weird. Check this out. A year ago, we're at $30.86. Now we're at $32. Can you imagine that? Holding it all year long for $2. A year ago, $30.86. Now it's at $32.19. What is that, $1.20? That's it, $1.20. All right, anyway. Okay, so $31 last year. The high of the year was the end of November. That's $47.77. The bottom of the year, TDS, okay, second week of April, right there, 22. Okay, high, low, where was it? Where is it? Look at the motion. Okay, up, down, up, down, up, down, up, down, up, down, up, down, up. What do you think? Let's look at the last 30 days. Because the last 30 days is going to give me a good idea of where do I think it's going next. Okay? High, low, where was it? Where is it? Look at this. Down, up, down, up. Could it keep going? Maybe. Me personally, I wouldn't do it. Now, the reason why I wouldn't do it, see, here we got, shoots up, pulls back. That number right there, 29. Okay? The high, 32. So from 29 to 32.50 is a $3 move. Now you may think $3 is not a lot, but $3 on a $29 stock is over 10%. It's a 10% increase in 2 weeks. So ask yourself the question: if the stock you just bought jumps up 10% in 2 weeks, do you take that profit or do you hold on and see what happens? Ooh, thank you for that. Oh, I got another one. MZK. Thank you, Christy. Or Christyle. Can't read that. Big Brain. Oh, my God. Big Brain. Every single week you ask me about ENB. And every single week I tell you, I don't do ENB because monthlies just don't work. Hold on. Let's do this for the fun of it. Just for the fun of it. You ready? Wait a minute. Yeah, ENB. ENB. Yeah, there you go. Big Brain. Here you go. You ready? Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. A nice move to the upside. Great. Now, it's a monthly optionable stock. All right? If you don't take profit, someone else will. Franklin, absolutely. I agree with you. Let's take a look at the last 30 days on ENB. Okay? Right there. All right, so here's the last 30 days for ENB. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up, down, up. Okay, great. Now, tell me, where's it going to be in the next 30 days? Do you think it's going to keep this momentum and be up here in the $50 or $60 area? 45 to 48 is $3, another $3 would be 51. So if she goes up, 51, right? Sounds logical. Keep the momentum going. All right, hold on. The option right here, okay, 48.34. The closest strike price is going to be the 47.50. But if I do the 47.50 and I buy it at 48.30, I'm losing 84 cents per share. Right? That's the math, right? If I'm buying it 48.34, I'm selling it for 37.50. The difference between the two, I'm losing 84 cents. So if I take 84 cents off of this, oh shit, what am I walking away with? Oh, come on, now I gotta freaking do that math. 84 from 120 is 40.36. I'm walking away with 36 cents per share. That's not even 1%. And I gotta hold it for 19 days. 19 divided by 7 is 3 weeks. Not even 1% for 3 weeks. And what if I'm wrong? If I'm wrong, I gotta hold it another 30 days until it hits that target. I don't do monthlies because the numbers just don't work. And trying to figure out where it's gonna be in 30 days, yeah, fun with that one. Look at what the 50 is offering. 5 cents. 5 cents for 3 weeks. Okay? That's less, that's 1/10%. Because 1% of $50 is 50 cents. Well, 5 cents is 1/10 of that. It's like, why even, I don't even bother with monthlies. The numbers just don't work for me. Okay, you like it, fine. You do it every single week. You ask me about Enbridge. And every single week I say I don't do Enbridge because the numbers just don't work for me. I'm late. What's this about? Rando Clips. This is about investing in dividend stocks for weekly cash flow. We're looking for a simple, safe, predictable, consistent 1% per week. That's over 50% per year. Using only pre-qualified dividend stocks. Those are companies that have consistently increased in the dividends for more than 2 decades. American Eagle isn't on your dividend list. No, it's not on my dividend list. You're absolutely right, Jack. All right, I've been a train with 6% dividend. Yeah, but dude, 6% a year does not thrill me at all. I'm looking at 1% a week. That's 50% a year. You're getting excited about 6% a year? You have fun with that. Been around for decades. Yeah, may have been around for decades, but they're not a dividend king. They're not a dividend aristocrat, which means the profits have not been consistent for 20 consecutive years. So, no. As much as you like it, hey, more power to you. You enjoy it. Oh, that ain't that bad. I'm a bit higher than that. All right, Ryan, good for you. I'd like to hear what you got. If you can get 50% or more safely, predictably, consistently, in less than 10 minutes a day, which is less than an hour a week, I'd love to hear it. I'm sure there's a lot of people that love to hear it. And I don't want to do day trading. I don't want to do cryptocurrency. I want to do something that is safe, predictable, and consistent. Do you sell options against any of your positions to increase your ROI? Absolutely. Every single position I do, I have a covered call against it. Okay, EFST, what's the criteria for stocks? Are you ready? My criteria for stocks is consistency of profitability, weekly option. That's it. Weekly options and consistency of profitability. Chase, if you only could tell someone who knows nothing about stocks just 3 tips to get started, what would you tell them? Consistently profitable, weekly options, covered calls. S&P 500, not just put money in that, it's consistent. No, Jason, it's not. You weren't here earlier when we look at SPY. It's not consistently profitable. It goes up, it goes down. It goes up, it goes down. When I'm talking consistent profitability, and the S&P 500 averages over the last 100 years, it averages 8 to 10% per year. That's it. If you're okay with that, you're in the wrong place, dude. I'm looking at 1% a week. That's 50% per year. The S&P 500 does not do that. Ryan, cheers on communication of investment information. It's a lot of nonsense out there. You're right, Ryan, it is. I like to keep it simple, safe, predictable in less than 10 minutes a day. That's it. What did you mean by not on the list? Your first safe rule. List. On my list are companies that are consistently profitable for at least 2 decades. What about C3AI? Never heard of it. Hormel bought in 27.40 last week. Let's take a look at Hormel. HRL. Alrighty then. Dylan, let's take a look at Hormel. You ready? Oh, that's not last 30 days. Here you go, Dylan. 30 days ago. 28. Shoots all the way up to 29. Big drop here. Now it's going back up again. So I would look at it 2 different ways. Number 1, possibility of dollar cost averaging, if you have that capability. If not, and you jumped in up here, well, it's at 25.44. I would be looking at the 26.50s, the 27s, or the 27.50s, depending on what comfort level you have. So this week's, holy cow, the 26s are going for 5. That's crappy. The 26s, a couple of weeks is 25. Yeah, but then you're going to be called out. Dude, that is a tough one, dude. Dollar cost average. Matthew Lancaster, thank you. I own one. Don't tell anyone. All right. Spencer, why would you not just sell puts? What makes selling calls, in your opinion, a better choice? Okay, good question. So you want to sell puts. Now, selling a put is almost the exact same as a covered call. Reason being, if you sell a put, you have to take a big fat chunk of money and put it aside. It's collateral in case the stock goes the wrong way. Well, what's a covered call? You take a big chunk of money, you put it aside, and you get a rate of return. Rate of return is rate of return. You're still taking a big chunk of money and putting it aside. Yeah, well, 26 and roll. Wild trades, okay, like that one. Thanks, welcome. Okay, my keyboard messed up. All right, whatever. All right, what else do we got? Oh, Piers. Pierre wants to take a look at 3M. Here's 3M. High, low. Where was it? Where is it? Look at this. Up, down, up, down, up, down, up. Right here. What's happening here? In the last couple of weeks, what's going on with 3M? Okay. Here you go. The high, the low, where was it? Where is it? Look at this. Down, up, up. Now it's coming back down again. Well, if the bottom's here at 144, the top is 160, now it's coming down. Yeah. How far down is it going to go before you think? TikTok Attic, XRP is the way to retire. XRP hasn't been around for 20 years, number one. Number two, it has no historical performance. Number three, I don't even think they have dividends. So where are you getting your profits from? Buying it and holding it? Yeah, no thank you. The long sprinkler guy. Give me 1 second. We'll take a look at that. I'm thinking about suicide after last week. Oh, Phil, I'm terribly sorry. Admit it. You just roll the dice every day and hope. Absolutely not. So you're selling weekly call options on dividend stocks. Absolutely. I'm interested in your analysis of NX. What the hell is NX? NX. It's a no is what NX is. I don't do monthlies. The numbers just don't work. Weekly options only. Okay? Are you thinking about an ETF? Nope. I'm actually opening up a hedge fund. Okay, so you like volatile stocks with extreme highs and lows? Absolutely not. I like dividend kings and dividend aristocrats. On the chart behind you, why would you think it's going down? Why would I think this is going down? Low, high, where was it? Where is it? Down, up, down, up, down. So, I don't know about you, but why do you think I think it's going down? Here's the high here, 1, 2, 3, 4, 5. 5 days in a row going down. That's why I think it's going down. Now, it's going to continue going down until it finds a bottom, turns around, goes back up again. Well, because that's what stocks do. They go up and they go down. That's it. They don't do anything else. Dylan wants to take a look at Starbuckies. SBUX. High, low, where was it? Where is it? Look at this. Up, down, up, down, up, down, up. Look at this turn right there. 88.19. The 88 is going for 121. The 89, no. The 88 right there. Wait a minute. 88, 21. Yeah, that works. The 88. Let's do an 88. Okay, TikTok Addict. I already said no to XRP. I don't know why you like it so much. Okay, I tell you what. TikTok Addict, if you can show me how you can consistently, predictably get 1% every single week, and when XRP does this, how do you overcome that? Well, the stocks that I'm looking at, they increase their dividends every single year. So even in a worst case scenario, okay, I'm getting higher and higher dividends year after year after year. So XRP is not on my list. They don't have dividends. No. Okay, XYZ Steve. O Realty. Okay, O Realty is a monthly optionable stock. I don't do monthlies. The numbers just don't work. Scotty Young, you got 5 grandkids. I only got 1. Now, my son is 36. When I was 36, I got 4 kids. My son's got 1. My other son, he's 31. He's got 0. My daughter's 26. 0. B-Cat and E-Cat, worth it for dividends. Smitty, let's take a look at it. Phil Collins, I'm 45 with 200,000 and tired of the rat race. What should I do? Well, Phil, if you want my humble opinion, give me a call. Or better yet, drop me your number. I'll call you myself. We'll chat. I'll give you my opinion. This is not for everyone. This is slow. It's boring. It's monotonous. It's the exact same stocks. Week after week after week after week. The same companies. Companies that have been consistently profitable for at least 2 decades. So if you're consistent for 20 years, well, more than likely 21, 22, 23 is going to be easy if you like it. All right, so where are we? Oh, Starbuckies. Yeah, I'm kind of interested in this right here. That looks interesting. So a year ago, Starbucks is at 93.99. Okay, the high of the year was in the beginning of March, 117.74. Now we bottomed out in the end of April, right? 75. Okay, high, low, where was it, where is it? Look at this. Up, down, up. It's definitely going up. So let's look at the last 30 days to get a better idea of where we think it might be going. Now, it's not guaranteed. There's only 3 guarantees in life. 30 days ago. High, low, where was it? Where is it? Look at this. Down, here's the bottom. Shoots up, here's the top. Back down, here's the bottom. 1, 2, 3. 3 days to the upside. Is it going up? It sure looks that way. Do you like it at 88.19? Well, what's the 88 look like? Well, let's go take a look. Okay. Covered call. The 8. Let's get rid of this. I don't need to see that. The 88 right there. Okay, 1 contract at the market. And here we go. Here's Johnny. Buy 1 covered call of Starbucks 100. That's the weekly. 5 September 25. That means the option is going to expire this coming Friday. So whoever buys that option, they got 4 days to make up their mind what they want to do. Me, I like Starbucks. I buy it. I want to hold it until it hits my target or until I die, whichever comes first. So if I'm buying it 88.19, I'm selling it at 88. I'm collecting 109 on every single contract. Every single contract is costing me $8,700. So let's see what the math looks like. Because the only way to find out what your rate of return is a little bit of a math. What's the profit divided by the investment? That's your rate of return for 1 week. A lot of people forget that part. This is not for the year, not for the month. It is for 1 week. And if I can get 1% every week, that's over 150% per year. And I'm okay with 50% per year. So let's take a look. Calculator. 109 divided by 8,691 gives me a grand total of 1 1/4. 1.25. Well, 1 1/4% is over 60% per year. I'm okay with 60% per year. 10 minutes a day. What did I buy? What did I sell? What looks good? Okay? Every single week. Every single position I has weekly options. That's it. Okay, XYZ Steve. O Realty is a no. I don't like monthly optionable stocks. The numbers just don't work. Okay? Here you go. O Realty. High, low, where was it? Where is it? Look at the momentum. Up, down, up, down, up, down, up. Okay, fine. It's going up. Wonderful. 58.76. Okay. The very next option right here, 58.76. We got some interesting conversations going in the background. I'm pretty sure we don't want to hear what's going on. But hey, it is what it is, right? Okay, so here's your last 30 days. The high, the low, where was it, where is it? Look at this. Up, down, up, 58.76. There is no 59. 57.50. If I buy it here, I'm losing... How much am I losing there? 58.76. Selling for 57.50. $1.26. Is that right? No. $1 would be 57. $1.26. I'm losing $1.26. This is going for $1.45. So what am I walking away with? 30 cents? Well, 30 cents on a $58 stock is 0.5% for 3 weeks. Okay, 19 days. That's 3 weeks. Why the hell am I investing for 0.5% in 3 weeks? That's not even 1% a week. Okay, why that? See, I don't do monthlies because 0.5%. Then where is it going to be in 30 days? Here's 30 days. Up, down, up, down, up. Okay, great. Where's it going to be in 30 days? Because that's the next option out. I don't do monthlies because the numbers just don't work. And I don't know why people keep asking. I don't do monthlies. They just don't work. I don't know how many times I got to say that. B-cat and E-cat. What the hell is B-cat and E-cat? B-cat. No options. What the hell am I looking at it for? E-cat. E-C-A-T. No options. Let's say no. And wait a second. No. No and no. B-cat, E-cat, no. No options, no thank you. I can't make weekly cash flow unless I sit in front of my computer. Yeah, no thank you. I just don't do it. It just doesn't work for me. Will, CSL. What the hell, CSL? CSL. Carlisle Cause Incorporated. No. I don't do monthlies. The numbers just don't work. Terribly sorry, Will. Frenchie's Garden. AI, never heard of it. Oh, C3AI Incorporated. It's at 1691. Here's the high, here's the low. Up, down, up, down, up, down. Okay. 1691, the 17s are going for 79 cents. If you like that. Heck, I'd even go 1550s. It's a safer trade. 1550s are way down here. It's never been that low. If you like this company. I've never heard of them. Okay? And I can almost I can't guarantee it. But I don't think they've been around for 2 decades. That's 20 years. Okay, we haven't been in artificial intelligence for that long a period. At least I don't think so. Say, sorry, Will. CSL's a no. Okay, Dryers, love the growth. Thank you. Sales, good afternoon. Eric, good afternoon. Steve, how does it get on the list? Be consistently profitable in weekly options. That's it. It's not that difficult. I like 2 criteria. Consistently profitable, weekly options. That's it. WHT stock is this. AI. Never even heard of it. What starting capital do you suggest or just one contract? Okay, G, I always tell people starting out to virtual trading, paper trading. Okay? I got 7 accounts and one of them is a paper trading account. Okay? 1, 2, 3, 4, 5. This one here is a paper trading account. Real. Okay? Up here. Okay? Look at all these. Okay? I get 7 different accounts and only one is a paper trading account. And yes, I still paper trade. I've been trading for over 30 years because there are new strategies I think up all the time. There are new companies I think, let's take a look. Before I put real money into anything, I want to make sure it has a possibility of profitability. Eddie, how many hours a week do you work? And how much do you make a week, a month, however you get money? Oh, Eddie, you ready? This trading strategy here, 10 to 15 minutes every day. I do mine in less than 5 minutes. I've been doing it long enough, I can take quickly look. This is what I'm looking at. You ready? What did I buy it for? What did I sell? What's it at now? What does it mean? I can do all that in less than a minute. Now, if I have 6 or 7 positions, well, I can be done in 5 or 10 minutes. Well, 5 or 10 minutes a day is less than an hour a week. And if I'm getting 1% every single week, if my account is $100,000, 1% is $1,000. So 1 hour of my time is worth about $1,000 on a $100,000 account. You're not going to be there yet because it's going to take you a while to get the new terminology and the thinking. Thinking is the biggest obstacle most people have, because most people aren't used to the idea of weekly returns. Most people think of annual returns. Hey, let me buy the stock. What am I going to get at the end of the year? Well, you good luck with that one. Okay? Now, I have a dog and I have fish. I have a fish tank with fish in it. I got to feed and water both of those every single day. But guess what? Neither one of them help me in my life paying my bills. Basically, what I'm coming to is, if you don't take care of your money every single day, how do you expect it to be around for you as you get older? All right. Oh, Joe, you sound like Bat Dad. I have no idea what Bat Dad is. DBL, how do you get 1% every week then? You said you don't like day trading. I'm new to the space. DBL, how are you today? Let me show you 1 second. Jason, 1% a week over week realistic? Is 1% week over week realistic? Can't think of any companies that consistently grow 1% a week over week. Jason, there aren't. Look at it this way, Jason. There's 10,000. You know what? Let's check it. We haven't checked out this week, so let's check it out. You ready? We're going to go here. Nope, I don't want that. We're going to go here. We're going to go to FinViz, F-I-N-V. To all right. Now, if you don't know, FinViz, Financial Visualizations, it is a website that allows you to take a look at a lot of different stuff. Exchange, market cap, earnings date, price, index, yield, average volume, target price, sector, float, blah, blah, blah. A lot of information. What am I looking for? This number right here. 10,354. That's how many companies there are. Now, they do add every week. Well, this week they took away 2, because last week it was 10,356. Well, this week it's 10,354. It changes every week. But think about it. 10,354 companies to choose from. Now, if I only want to do dividend companies, companies that actually share profits, I'm going to go right here. $5,865 companies. 5,865 companies actually have a dividend, and they're going to share it with you. Well, the rest of them, I don't even want to look at them, because at my age, 61, I'm retired, which means I need to have my money work for me. I have no desire whatsoever, and there's not a single stock, not a single thing anyone can tell me, for me to take my money, invest it in something, and just, watch this. Ready? Sit and watch it year after year after year, waiting for it to move, to make a profit. Well, I get bills to pay, and buying a stock and waiting for it to move, that doesn't do it for me. I need weekly cash flow. So that's where it came with the strategy. Well, actually, I didn't come up with it. I did come up with it. Let me explain. 2008, my 9-year-old daughter said, "Daddy, what are you doing? Can you teach me?" Well, think about that. 9-year-old little girl wants to learn how to trade in the stock market. That's unheard of. I've never heard of a 9-year-old little girl wanting to learn to trade the stock market. Maybe there is somebody out there. I don't know. But she said, Daddy, can you teach me? Great. So how do you teach a 9-year-old? Most adults don't get it. You guys are asking me about stocks. I'm thinking to myself, what the hell are you thinking putting your money into that? Okay, SPY, the spiders, they're not consistently profitable. They're not. The profits are up, they're down, they're up, they're down, they're up, they're down. Companies that are consistently profitable, Dividend Kings, 50 years of continuous profitability. Dividend Aristocrats, 25 years or more of consistent profitability. Dividend Champions, Dividend Contenders. Now, Warren Buffett's list, I can't really say. But if it's good enough for Warren, hey, it's good enough for me. Now, those 5 lists will give you about 300 different companies to look at. Now, let's take a look at the numbers. If I like 300 different companies, how do I decide which ones? Simple. You put it into a list. Well, what list? Where are we? Right there. Get rid of that. This. Oh, come on, you were there a second ago. Right there. Oh, and right there. Okay. Now, this is an EX dividend calendar. All these little green dots represent companies that have been consistently profitable. This list, 25 consecutive years. Okay, this is just one of the lists I have. I have like 8 lists. Companies that are over 100 years old. A list that I've been working on for the past 15 years. It's a combination of a bunch of different companies. But Dividend Contenders, Dividend Champions, a whole bunch of different lists. But this list here, what do we got? Fast-Turnal, Granger, Clorox, Consolidated Edison, Target, ExxonMobil, Emerson Electric, Walmart, Sherwin-Williams, Dover, Nexteria, Pepsi, Kimberly-Clark, Johnson & Johnson, 3M. You probably heard of most of those. But here's the thing. Let's take a look at the numbers. You ready? 300 different companies. There's 266 trading days per year. 4 quarters. Because most of these companies pay a dividend every 90 days. So 90 days, 3 months. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. 4 quarters, 300 stocks. 300 stocks in 90 days. It's not 90 days. It's 66. Because it's 66 trading days per quarter. 13 weeks. So imagine that. 300 stocks, 13 weeks. Week number 1 looks the exact same in quarter 1 as it does in quarter 2, quarter 3, quarter 4. Week number 3 looks the exact same in the first quarter, the second quarter, third quarter. Because the stocks, it's over and over and over again. Same stock. 3M. Every 90 days. Third week in August. 3M. Lennar. First week. Every 90 days. They're consistently profitable. They're consistently with their consistency. What is wrong with consistency? And profitability. What's wrong with that? Weekly options. I can trade each one. So look, you got 3 this week, 1 this week, 15 this week, 2 here, a bunch there, a bunch here. Now we can look at the other lists. Well, as a matter of fact, let's take a look at this. Okay. What is that? 9, 3, 7, 30, 28, 34, 15, 12, 15, 56, 48, 21, 18, 37, 125. I can go on and on and on. Okay, every 90 days, these companies will switch and pay again. Now this is August. Let's look at September. Give it a minute. That's September. Totally different list. And then October. Totally different list. Okay? Every 90 days, over and over and over again. It's boring as hell. It's repetitive. It's monotonous. It's the same thing over and over again. But guess what? It's also consistently profitable over and over and over again. These stocks don't have a lot of movement. There's no big ups, no big down. They're kind of boring. Well, I like boring because for me, boring is consistently profitable. 1% a week, I'm perfectly okay with that. So crypto wants to take a look at an order. So he says, show us a trade you would take and how would you put in your order. We've already done that a couple times, but let's do it again. Albemarle. Let's take a look at Albemarle. A-L-B. Nope. Sirius, I-R-I. Ooh, yeah. Yeah, let's take a look at Siri. All right, you ready? Siri, here we go. High, low, where was it? Where is it? Look at this. Down, up, down, up. 2364. The 24s are going for just about 1%. So let's see what Siri looks like. Now, I already own it, but what's his name wanted to take a look at it. Look at the last 30 days. Okay, last 30 days. Here's your bottom. Here's your top. Okay, down, up, down, up, down, up. All right, if I was going to do this one, all right, let's go check out the 24s. Matter of fact, I would do the 2350s. Okay, 2350 right there. One contract. Market order. Confirm and send. Here we go. Buy one, covered call Siri 100, that's the weekly. 5 September 25, that's this coming Friday. The 23.5 call option on Siri at the market to open to open. Okay, 2 trades, buying stock, selling the option. Profit $35. Investment $23.15. Well, let's take a look at the calculator. What's the calculator look like? $35 is the profit. Divided by 23.15 gives me a grand total of 1.5%. That's for 1 week. 1.5%. 1 week. Multiply that by 52 because there's 52 weeks in a year. Multiplied by 52, that's 78%. If you can get 1.5% every single week. Okay, my average is 1.4, but I've been doing this for a while. So the question is, do I like Siri? Does it make sense? Do I like Siri at this current price? Am I willing to buy it, sell a covered call every single week, get some kind of cash flow come in? It's a simple question. It's a yes, it's a no. 50% of a live goal is completed. Celebrate. Yay! I have no idea what that means. You are off the screen when you go to the left. Okay, thank you for that. What else do we get? Ooh, 69 questions. Holy cow. We got 15 minutes left. Holy jolly. Let's get some of these questions out of the way. Alrighty. Audrey, why does everybody like XRP so much? XRP. Let's see how profitable XRP is. Symbols similar to XRP. There aren't any. Oh, XRP looks like it's a what do you call that damn thing? Forex. Okay? XRP US, XRP UAD, XRP Canadian, XRP Great Britain, XRP Euro, XRP, yeah, no thank you. No thanks. All right. What do we have? All right. Questions. Okay. Bamat Mac. Do you do CSP? Oh, cash secured puts. Once in a while, but not often. I find that cash secured puts, the rate of return is not as much as the covered calls. Macho 147, you missed the list. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Okay? Maria de Jesus Garza, good evening. Dat Boy Sosa, good evening, Bat Boy. Okay, XYZ Steve, O Realty. Now, Amerbash, Coin. I don't think Coin has options either. I'm not options, dividends. COIN, Coin. Let's take a look at Coin. Coinbase Global. There are no dividends. Sorry. CSL. Will, what the hell is CSL? CSL. Carlisle Companies. Okay. Wow. The dividend is increasing. Wow, nicely. So why is it I never heard of them? Let's get out of that. Let's get out of this. There. Here. CSL, Carlisle. There it is. Oh, that's why I don't do monthlies. The numbers just don't work. Sorry. Who said that one? CSL. Oh, Will. Yeah, Will. I don't do CSL. What is on the right? Much love. What is on the right? Well, this is the chart. This is the option chain. Okay, we're doing stock options. More specifically, call stock options. What are some good stocks to invest in? Miguel, how are you today? Let me see some good stocks. Macy's, IBM, Intel, Dell, Microsoft, Home Depot, General Motors, Ford, AT&T, General Parts Corporation, blah, blah, blah. Dividend Kings, Dividend Aristocrats, Dividend Champions. There's a whole bunch of them. How do I get my premium on Thinkorswim after expiration? Is it automatically deposited? Okay, Irma, the premium is entered into your account the very same day you sell it. So most of the time, I buy all my stocks on a Monday, and I sell my options on a Monday. All that money gets deposited into my account on Monday. So guess what I do on Tuesday? I pay my bills. Whatever's left over, I put it back into my trading account. What am I going to do with the money? Pay my bills. That's about it. Jason, is 1% week over week realistic? Yes, it is, Jason. As a matter of fact, Jason, you're new here, so let me show you something, Jason. All right. Jason, right here behind me, I share I got 7 accounts, I share 3 of them publicly. Okay? Account 1, account 2, account 3. Week 34. August 18th to August 22nd. I didn't put up this week's yet. Let's go back a little bit. All right, right there. Week 20. This is in May. All right, you ready? 3.1, 3.6, 4.2. Do I always get that high? No, I don't. It's nice when I do, though. Week 20. Week 21, 4.4, 0.8. See this? 0.8. I didn't hit 1% this week. 3.8. 0.59. See, I didn't hit it. 2.7, 1.4. 2.1, 2.7, 2.0, 2.6, 1.4, 3.4, so on and so forth. I share all my trades after the fact, of course. Sorry. Cincinnatus, no, you're lagging. Sorry about that, dude. Amber Bash Coin, don't do it. Will, CSL, we looked at it, it's a no. XYZ Steve, O Realty is a monthly, that's a no. Moving Pro, Celsius, CELH. CELH. Hell no. Why the hell would I buy at the high of the year? Terribly sorry. I don't buy anything at the high of the year. If you like it, hey, more power to you. I don't buy at the high of the year. Can you give us your opinion on Marvel? Ooh, I like Marvel. I actually have some Marvel. MRVL. Oh, that's what you want to see. You want to see that right there, don't you? Okay. There's the high. Here's the low. Big drop right there. So, I haven't done this in a while, so let me briefly give you my explanation of this right here. That big drop goes from 78 down to 64. Why do you think that is? It's a serious question. Why do you think that drop is like that? Now, I know a bunch of you are going to say they missed their earnings. So, missed their earnings. Did the CEO call up all the employees, get on the loudspeaker at work and say, "Good afternoon, everyone. This is your CEO. I got an announcement to make. We didn't hit our target market, so I need half of you to volunteer to stay home next week so we can make up the difference on our stock price." No, that's not what they said. They missed their target. This thing dropped. So what actually happened? Well, for that, I got a little bit of a fun thing to show you. You ready? Well, right here, this is the bid and this is the ask. Okay, do you see the difference between the two? $63, $63.03. That is a 3-cent difference. A 3-cent difference, that is called the spread. Guess who gets the spread? The market maker. You want to see where it's manipulated and you're about to get pissed off? Some of you are going to get pissed off right now. Are you ready? Okay. 63, 63.03. 3-cent difference between the two. That means the market maker collects 3 cents for every share that is traded. So here's some information that some of you probably didn't know. So let's get out of here. Now remember that 3 cents, okay? Charts. Here we go. Here's Marvel right there. Now, first thing I want to point out, these little blue lines down here, you see them? That is the trading volume, how many shares per day traded on average. So if we take the line and go on average, right about there, okay? That's about average right there. 12,300,000 shares every single day. Think about it. 12,300,000. So let's see. Let's get the calculator out and see how much money the market maker makes. Okay, 12,300,000. There you go, 12,300,000 shares per day on average, on an average day. Multiply it by 3 cents per share. Multiply by 0.03. Okay, so the market maker makes an average of $369 a day. On average, $369 a day. Now, before you get all excited, oh, I'm going to be a market maker. Last time I checked, it was like $350,000 application fee. And you have to have X amount of years in the market. You know, actually being there, you know, runner or some kind of experience. at the stock market in order to become a market maker. But 369,000 per day. Now, what happened on Friday? Okay, we'll all say earnings. Well, you're probably right, but here's something you may or may not know. Okay, there's 5 numbers. Actually, 6 numbers. 6 numbers every single day. Now listen closely. Number 1, the opening price of the day. That's what the stock opens at. Number 2, the closing price of the day. Number 3, the high price of the day. Number 4, the low price of the day. Number 5, the volume, how many shares traded. Number 6, the range, the distance between the top and the bottom. That is the range, how much distance, okay? 6 numbers. Now, we know on average, $365,000 the market maker makes because about 12 million shares are traded on average. So, listen closely. 5 little words. We didn't hit our target. Out of those 6 numbers, open, high, low, close, range, volume, 1 number is controlled by 1 person and only 1 person. All the other numbers we do. Okay, we decide what's too high. We decide what's too low. We decide how much we want to buy, how much we want to sell. That's the range and the volume. Out of all those numbers, the 1 number that is controlled by the market maker is the opening price of the day. Now, the market maker, he may wake up and say, you know what? I need a new Lamborghini, or I need a new Bentley convertible. Let me drop the price so that I can create more volume because people are going to panic, and that way I'll get a nice little bonus today. What happened on Friday? We didn't hit our target. 5 words. The market maker was at 78. Okay, he dropped it down to 52. Now, are those buyers looking for a deal, or are those sellers panicking, trying to save whatever they can? Because they think it's going to go to 0. You say, you know what, 52 is better than nothing. Panic. Okay, hold on. How many shares traded that day? Those 5 little words. We didn't hit our target. Okay, here's a number right there. So let's find out. $95 million shares. Well, 100,000. 95.1. Okay, let's do the math. Remember, market maker makes 3 cents per share that's traded. 95 million shares traded that day. Well, let's bring it up. Okay, 95,100,000 multiplied by 3 cents per share, 2.8 million. Now, $2.8 million went to the market maker on Friday. Why? Because the market maker got a text message first thing in the morning. We did not hit our target. We didn't hit our target. Great. So the market maker decides, it was here, now I'm dropping it down to there. So are these buyers, are these sellers? That 19 million. 2.8 million he walked away with. He usually gets $365,000 a day. Well, this day, 2.85 million. That's a big drop. That's a big increase in cash flow. So also, there's another thing. Okay, here's the bottom right here. Stock went up nicely. Now, it was at 70 and jumped up to 78. So from 70 to 78, that's more than 10%. Here's the bottom here. Nice move right there. The top is right there. 70, 78. More than, it's like 11%. If you don't take your profits, don't be surprised if the market maker takes it away from you. That's why I always say, it's not a profit until you take it. It's not a loss until you take it. Nobody ever went broke taking profits. And this is manipulation at its finest. Okay, we didn't hit our target. Great, 5 little words. Market maker drops it down, and then volume jumps from 12 million up to 95 million. That's a huge jump. It's all financial. The freaking Wiener walked away with 2.8 million on Friday rather than 365,000. Imagine that. What a tragedy. He makes $365,000 on average every day, and now mother had to be greedy for that. It's the only number that is manipulated by one person. The opening price of the day is controlled by the market maker. So, we are past 11 o'clock, so I'm going to answer up some of these questions, and I'm going to be done for the day. How many covered calls do you do a week? Over 100. What stock market? Too much math for me. Terribly sorry, dude. You got 2 choices in life. Okay, Manolo. You got 2 choices when you get to my age. Take responsibility, do it yourself, or hand it over to someone else, let them do it for you. Okay, Keto, Verizon, we'll have to look at it tomorrow. Gabriel, do you look at the Delta? No, I do not. Remember, it was created for a 9-year-old. I wasn't about to teach her about the Greeks. Vahid Moradi, Ondu, no idea what that is. 007 Spy video. Okay, thank you. Duggo, Coca-Cola, look at it tomorrow. Kevin's, RZLV, tomorrow. G, thanks. RGO Solace, good evening. Duggo, Procter & Gamble, like that one too. I need a good stock. Patty Beers, how are you today? Patty Beers, stick with the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. They're consistently profitable year after year after year. How can you go wrong with that? We can't see your screen to the left. Okay. Eric, STZ, tomorrow. Kevin. Warren is doing covered calls on all his stocks. He's not just waiting for dividends. I don't blame him. You in new Warren Buffett? I have no idea what that means. Doe, how are you? William, how are you? Thoughts on ACN? Take a look at it tomorrow. Daisy Poppy, does a company like Schwab or Fidelity handle dividend stocks for a customer? I really don't know. But Daisy, if you want to give me a chat, we can talk. K-Van loves boring. No, so do I. Paul Mendez, yay, dividends. William, we already talked about ACN. What are you doing with the stock? I'm writing covered call against every single position I have. What are some good stocks to invest in? Dividend Kings, Dividend Aristocrats, Dividend Champions. How do I get premiums on Thinkorswim after expiration? No, you get them when you sell them. Starbucks, we took a look at that one. Thank you, Echo. That's 52% growth year after year. Yes, Jason. Math is pretty simple. Can you be my sugar daddy? Michael, that's disturbing, but okay. Finished work of Jesus. You can have to make sure the company is healthy and know when to get in at a good price. That's exactly what I've been saying. All right, Paul, good evening. Nice Moog stand. Stool. Moog stool? Okay, whatever. RTX. Brian, we'll take a look at it tomorrow. ADC. Arnold, we'll take a look at it tomorrow. Bamatek. Or Bamatek. Okay, first time here, loving it. But you can do one more order with math. Almost got it. Take a look at that. All right, you guys over here, thank you kindly for that. Otis, tomorrow. Shorted all chip makers. All right, football legends, how are you today? What are taxes like? Taxes are what taxes are for those who enjoy paying them. Okay, if you don't enjoy paying your taxes, talk with a tax strategist or do some research online on how to avoid paying taxes legally. Rob, it tanked. I'm not quite sure what we're talking about, Rob, but okay. Market Crasher, how are you today? Sprite, William McKinney says hello. William McKinney. Name sounds familiar. Sweet Den, thank you. Latin United Music. Joe Drake. Tim's on the great. What's your thought on SCHD? Tim, take a look at the profitability on consistency for SCHD. You probably run from it. Alan, always good to see you, James. Thank you for your knowledge. You're welcome there, Mr. Allen. Football legend, will chips drop more? Don't know. Okay? I just look at companies that are consistently profitable. I don't even know if there's any chip companies on there. I do buy Dell and what's that? Intel. Okay, so done. I'm done with all the questions. What do we have over here on YouTube? Now I try not to do too much of YouTube because there's a lot of weird people out there. Dylan, Ryan, you sell week after week options until you hit your original strike price. Absolutely, I love it. Brandon, thank you for that. Ryan, so this is just covered call strategy. Absolutely. I call it dividend capturing 2.0. His strategy is to sell covered calls on stocks at the entry price to get the shares called away after a rinse and repeat. Thank you. Very good. Thank you. I heard you can live a nice life in the Philippines for $1,000 a month. Yeah, you can. If you want to live in the Philippines. Now, don't get me wrong, I wouldn't mind living in the Philippines, but all my children and grandchildren, I only have one grandchild, but all my children and grandchildren, I hear America is killing me. Sorry, dude. I think it's a little misleading. Thank you, Ryan. Irma, I did one contract of Marvel last week, strike 74. It gapped down to 63. What next? Can I still sell covered calls? Yes, you can. But Irma, if you in at 74 and you sold the 63s, now most people don't buy a stock anticipating to get rid of it quickly. Most people just buy it and hold it to collect the dividend every 90 days. Okay, so if your intention is to hold it for 90 days for the next dividend, fine. But as the weeks pass, you can look at the 65, 66, 67. It's probably not going to be that huge, but if the company's consistently profitable and you have no problem holding on to it until it comes back up, because I love stocks when they drop. Let's find out. Which one were we talking about? Marvel. Oh, yeah. Okay. So I actually have some Marvel. And yeah, I saw this. Didn't make me the greatest, the happiest camper in the world, but I have no intention on selling Marvel whatsoever. Okay? I will hold on to it. I will sell it's here now at 62. So I'll look at the 66s or the 67s or the 68s. That's what I'm going to do. Okay? Now, I'm not giving you advice. I'm just saying that's what I'm going to do. Okay, football legend. Hawaiian Electric has not had any dividends for quite a while. Okay? Ryan, the 50% is optimal. Thank you. Dylan, Irma, sell like 2-3 Delta, and if it comes close, roll into the next week if zero loss. Thank you. Hey, Michi's here. Hey, Michi, hold on a second. Hey, little buddy. Little buddy. Mama's on the phone. Mama's on. Come say hi to Mama. Right here. Okay, you ready, Michi? Hold tight. Climb up. See, look. That's Mama right there. Say hi, Mama.
Hi, Mommy.
Tell Mommy what you're doing. You tell you we make cookies and candy?
Yeah, we make cookies and candy.
And we had a lot of candy. Hey, she said, hi, baby.
Hi. I love you.
Don't worry, Mama. We're getting ready to go to bed very shortly. You ready to go? Ready to go to bed?
I'm ready to go home.
You ready to go home?
Yeah.
No, we're going to get donuts tomorrow, remember?
Yeah.
And then we're going home. Say bye to Mama. Say bye, Mama.
Bye, Mama. Bye, Mommy.
All right, can I turn it off? Let's say bye to everyone. Say climb up here. Climb up. Here we go. All right, sit right there. All right. Okay, ready? Let's do one at a time. You ready? Say bye, you guys.
Bye, you guys.
Whoops. All right, bye over there. Let's say bye to these people here. Say bye, guys.
Bye.
Okay, bye to there. Bye, guys. Oh, over here. This is, wait a minute. This is Twitter. Say bye, Twitter.
Bye, Twitter.
Okay. Say bye to TikTok.
Bye, TikTok.
Okay, get that out of this way. Go here, out of there. Bye, guys. Oh, that one's done. Over here, this is YouTube. Say bye, YouTube.
Bye, YouTube.
And one more. Oh, no, we got two more. Hold on. This one here. This is TikTok. Say bye.
Bye-bye.
And out of there. Oops. Come on. Out there. There it is. And now, okay. And one more. You ready? The last one is down here. Right there. Bye, guys.